Bitcoin as collateral is the real endgame. Most people try to understand Bitcoin through the money lens, like, will I buy coffee with it? Will it replace the dollar? But that is not the entire battleground here, because the real battleground is collateral, because the world runs on collateral. The global economy between humans functions because institutions, corporations, governments, and banks constantly pledge assets to borrow, to trade, to hedge, to settle, to get liquidity, to fund operations, everything. Collateral is basically the adult version of trust. It's what you put on the table when someone says, cool story, now prove it. And if you've ever wondered why certain players can borrow billions of dollars at low rates while everybody else pays those high credit card APRs, that should come with a warning label. It's because those players hold the kind of assets that the financial markets treat like gold star collateral. And for a long time, the king of that world have been government bonds, especially US Treasuries. They are the default, okay, we will accept that asset in global finance. But Bitcoin's disruption doesn't have to start by being your spending currency. It starts by becoming a premium collateral asset in a system obsessed with pledgeable value. And once an asset becomes widely accepted collateral, it starts to act like a financial skeleton key because it unlocks credit, it unlocks leverage, it unlocks liquidity, it unlocks entire new markets that are built around it. So that is what I'm saying. Bitcoin is going to become the new monetary architecture of society. Bitcoin as collateral is the entire endgame because collateral is how the system decides who gets funded, who gets liquidity, and who gets to scale. If Bitcoin wins that role, it doesn't just join the financial system, it starts rewriting the rules of it. So when I say collateral, I don't mean it in the casual way like I put my car up for a loan. I mean collateral as the core operating system of finance itself. Collateral is the asset that you post that makes somebody comfortable giving you liquidity. It is the thing that turns trust me into here is the money. And once you start to see that, a bunch of stuff really starts to click into place because the modern financial world is basically a giant chain of transactions where everybody is asking some version of what are you posting? That is repo markets, that's prime brokerages, that's derivatives margin, that's trade finance, that's secured lending, and that is corporate credit facilities. Even the stuff that looks like it's about interest rates is often about the quality of the collateral. Here's a simple way to think about it. Collateral compresses trust into an object. Instead of needing me to deeply analyze your character, your intentions, your competence, your potential for future cash flows, and your vibe, I just look at what you have pledged as collateral, and if it's high grade enough, the deal can happen fast and at scale. And at the end of the day, that is why certain assets in the human economy become system important, and it's not because they're exciting or some people think they're shinier than others. It's because they are accepted everywhere, instantly, and in huge size. And because of Bitcoin's properties, it really is the top tier collateral that exists in the entire world. And that is why Bitcoin is going to start to shape the entire behavior of the system around it. So the obvious question that a lot of people ask is, okay, why would Bitcoin ever become premium collateral if the world doesn't accept it? Why would the serious lenders, why would the serious institutions or the markets treat it like something that you can reliably pledge? And the answer is because Bitcoin has that weird combination of traits that financial markets tend to reward aggressively, especially when they are thinking in terms of collateral quality. And obviously we're orange pilled, so we know first is scarcity and predictability. We know that Bitcoin's supply schedule is transparent and rule-based. There is no committee meeting where somebody wakes up and decides, actually, let's do 30% more. In collateral terms, that matters a lot because collateral is about confidence over times, not vibes in the moment. And second is durability, and this is a really important one because Bitcoin is immune to physical risk. Look at commodities, look at other assets. We know that a building can burn down, so that is a weakness for real estate as collateral. We know that a company can get disrupted from AI. A commodity can spoil. If it's a perishable good, it can rust, it can leak, or it can get stuck in a shipping port, but Bitcoin doesn't have those operational failure modes at all. It's an asset that doesn't degrade, and that is a huge deal when you're trying to use it as the backbone of a credit arrangement. And third is portability, and this one really is underrated because collateral works best when it can be moved, pledged, verified, and settled with very minimal friction. The more friction that you have, the more haircuts that you get, the more paperwork, the more limits. Bitcoin is extremely portable. Obviously, it's super easy to send back and forth. And as institutional infrastructure improves behind the asset, that portability starts turning into real financial utility from a lot of the institutions that are blocked off from the asset right now. And then, of course, divisibility is another one because collateral isn't always posted in these neat, round numbers, believe it or not. Markets constantly resize their risk, their margin, their exposure, and Bitcoin can be sized very precisely, which matters for modern collateral systems that can run on continuous risk management. And then fifth is verifiability because you can prove ownership, you can verify the transfer of your asset, and you can settle with the highest levels of integrity in collateral markets. That is oxygen. The easier it is to verify what is real and who has it and that the transaction is real, well, the easier it is to accept at scale. And then obviously there is one big characteristic that really decides whether something can become major collateral, which is liquidity. Collateral has to be something that you can sell quickly if things go sideways, and that's why Treasuries dominate today. But you know what's even more liquid? It is Bitcoin. And this really is where Bitcoin's story really matters because Bitcoin's liquidity has been compounding for years, and the institutional rails around it continue to get thicker, especially since the spot Bitcoin ETFs came to the forefront of the market here. And as that deepens, Bitcoin starts looking less like a speculative sell-side asset and more like an increasingly financeable asset. So the point I'm making here is that unlike any other asset in the entire world, Bitcoin checks all of the boxes that strong collateral tends to have. And as its market depth continues to grow, it just becomes easier for lenders to underwrite, it's easier for risk teams to approve, and easier for the system to treat as postable in bigger and bigger size. That's when the game really changes because once Bitcoin becomes normal collateral, it doesn't just sit there, it starts unlocking credit capacity. Okay, so now let's make this real because collateral can sound like a very abstract concept until you look at where it actually shows up in the real world. A good way to think about modern finance is a lot of the biggest transactions on earth are basically secured loans dressed up in very fancy clothing. And the security part is collateral. The first example are the repo markets. Now, repo is actually short for repurchase agreement, and the simple version of this is institutions, they borrow cash very short term, and then they post high quality collateral, usually treasuries, to do it. And this is how massive players, they fund their day-to-day balance sheet activity. It's not some niche thing. This is the core plumbing. So if Bitcoin becomes accepted collateral in more institutional contexts, that is a big deal because it means Bitcoin stops being something that you hold and it starts being something that you fund against, and that is liquidity power. The second example are derivatives and margins. So any futures market, any options clearing, the swaps, all of it, it all relies on margin, and margin is just collateral by another name. If you want exposure, you post collateral. If your position moves against you, you post more collateral. Anybody who has done options trading knows exactly what this means. The whole system stays stable because collateral is constantly resizing risk in real time, and what assets qualify for margin matters quite a lot. So if Bitcoin becomes the standard and it's a more widely accepted form of margin collateral, it changes the participation, the efficiency, and the capital cost, and it also changes who gets to play without constantly converting into legacy collateral first. And then the third example, prime brokerage and market making. You see, a lot of the financial world functions like a nightclub with a velvet rope. The people who have balance sheet access, they continue to get inside the nightclub, and everyone else outside is just arguing on Bitcoin Twitter. Prime brokers, they extend financing and leverage to big players based on the quality of what they can post, And then better collateral just means better borrowing terms, higher limits, and cheaper funding. So if you zoom out and you really see the pattern here, collateral is the thing that determines who gets liquidity and how cheap it is. Now, this is why Bitcoin matters in this context. This is the root of the issue here, because if Bitcoin becomes widely acceptable collateral, which it will because it is the apex asset across every dimension, it starts competing with the incumbent best collateral assets that just dominate the entire financial system today. And when you compete with the system's preferred collateral, you're not competing for attention, you're competing for the keys. And that really is the ultimate point I'm trying to make. We don't have to imagine Bitcoin replacing every payment method on Earth overnight to somehow spearhead hyper-Bitcoinization. We can watch it move into the collateral role that already governs the largest human marketplaces, and once it does, entire business models really start to adjust around that reality. And this really where Bitcoin will disrupt the real economy, because collateral leads to credit, and credit leads to everything. Global trade runs on short-term credit. Goods move across oceans, invoices take time to get paid, and somebody has to front liquidity in between. Banks and lenders today, they do that based on collateral, guarantees, and credibility, but Bitcoin collateral introduces a new way, a superior way to secure those credit lines, especially for global mobile capital or firms that want an asset that doesn't depend on the other country's banking situation. Corporate treasury is another one here, because companies, they hold safe assets partly because they want to remain financeable. They want to access revolving credit facilities, attractive debt terms, and flexibility in stress scenarios. And if you look at a company with a lot of Bitcoin collateral, like Michael Saylor's strategy, for example, go look at that guy's borrowing terms, 0 to 1% in the billions of dollars. That's all I'm going to say. And interestingly enough, real estate and consumer credit connects too. We know that mortgages exist because the house that you live in is collateral. A huge portion of the middle class's financial life is basically borrow against collateral, and if Bitcoin collateral becomes mainstream, that means you start seeing credit products designed around it. Borrowing against Bitcoin for major purchases, refinancing strategies, liquidity without liquidation. The basic pattern stays the same, but the collateral changes. And then a big one is going to be the insurance industry, and Bitcoin is going to absolutely eat that entire industry whole, because a lot of insurance is about proving that you can pay claims in the future, which often means posting capital and collateral in regulated ways. So if Bitcoin becomes more accepted in more institutional frameworks and it opens the door for new ways to post and manage that backing, you have to think why the firms wouldn't look for portable liquid assets. Imagine if you had to liquidate $100 million of real estate, how long that would take. And then imagine how long it would take for you to liquidate $100 million of Bitcoin if you had to pay some claims. That is the liquidity advantage of Bitcoin showing up and why Bitcoin is apex collateral. And then therefore, insurance companies are incentivized to buy Bitcoin instead of buying real estate. And that's why real estate will actually be demonetized over time as Bitcoin continues to eat the world. But that's another topic for another video. And then even energy and commodity producers, they live in a collateral world too. They hedge, they finance inventory, they fund operations through secure credit arrangements. So Bitcoin as collateral will really touch everything. Bitcoin is going to be a huge credit engine for every single industry. And once it becomes that, it is going to start to change the cost of capital. And when the cost of capital changes, industries just start to reprice. This really is the bridge between Bitcoin as an asset and Bitcoin as the infrastructure that reshapes how the economy funds itself. So the end game isn't that everybody pays for their groceries in Bitcoin. I know there's a lot of Bitcoiners that like to spend their Bitcoin and use it as the electronic cash that Satoshi called it, but there is a huge future for Bitcoin becoming the globally recognized pledged asset, and the people who like to hodl and never sell their Bitcoin, these are the people that really understand why. Because it can sit beneath the global credit market the way that steel sits beneath a skyscraper. And once that's true, you really start to see the parallel credit system emerge, and this will not be the one that's dependent on political cycles or a central bank narrative. It will be dependent on an asset that can be verified, held, moved, and posted without ever asking permission from anybody. So you have to stop asking, will Bitcoin go up, and what happens to the world where the best collateral is outside of the legacy system. Betting on Bitcoin is just a bet on irrational human incentives. They will be incentivized to buy it because the properties of the asset are superior. So if Bitcoin becomes the most trusted collateral, and it will because it's the apex asset, it will become the quiet standard beneath a lot of human coordination. The thing that lets strangers do big things together because the settlement layer carries more truth than the story. That's why this matters, because when the world's best collateral changes, the world changes around it. And Bitcoin was designed from the beginning to be the kind of asset that can hold that role. My name is Adam Livingston. I am the Bitcoin Wizard. I hope you enjoyed today's transmission of the Orange Gospel of Bitcoin. If you want to be positioned in Bitcoin before the world wakes up and realize how it is the apex asset, Swan Private is for you. If you want to be paired with a professional who can help you be the most secured in your generational Bitcoin position, go to swan.com/no second best to learn more. Have a terrific day, everybody. Do not party too hard. Class dismissed.